Everybody's wondering what's next after the downgrade. It could impact everything from your retirement account to credit cards and other loan rates. And with us tonight is Mike Rogers, president of 360 Financial in Minnetonka. Mike, we always appreciate you coming in here and trying to sort this stuff out for us.
Sure, Jeff, no problem.
Is there any hope that the markets will begin to stabilize tomorrow, or are we in big trouble?
Well, I don't necessarily think that we're in big trouble. I mean, that's what everybody would want you to believe at this point. Here's what happened. You know, 3 weeks ago, the S&P guys said that, you know, they were putting a 50-50 chance on they were going to downgrade the U.S. government debt. So they announced it Friday after the markets closed. They purposely announced it Friday after the markets closed so that people could digest it and figure it out. But I really think we're in a situation where, you know, the markets are going to look at this. They're going to look and say this was not a big surprise. I would suspect we'll have some sort of sell-off in the morning because we've had a little bit of sell-off in the overseas markets. But I am not looking, personally, in my opinion, for a drastic sell-off in the markets based just on this news.
Yeah, you mentioned the other markets, the Asian markets opening tonight. They could be a good indication of how Wall Street and the other markets absorb the downgrade. So what are we seeing in Asia right now, and how does that set the stage for what happens tomorrow morning here?
Well, that's a good question. As far as setting the stage for tomorrow, a lot of times Asia reacts to our news. We don't necessarily react to what's going on in Asia. That's the very first thing. So what they're doing is looking at the news. They're early on as far as opening up for the trading compared to, you know, our market, obviously. So they're digesting it. We're not seeing a free fall in the Asian markets. The Dubai market was down. You know, the other Asian markets are open right now. So, you know, again, will we see something here in the U.S. in the morning? You know, I'll be at the office early, but again, it's going to be hard to call because we haven't had this situation before. But again, it shouldn't be a big surprise. It's just a matter of how much is already baked into the market. In other words, was the market completely surprised by this? I doubt it. And that would impact the market more than anything.
You know, other countries like Japan and Canada have been downgraded from the AAA rating, and they've gotten it back. So if the U.S. is headed towards another recession possibly, or could we learn enough from the last recession in 2008 to prevent that from happening again? And how does the U.S. get back to that AAA? Is it going to take time?
Well, it probably will take some time. To get back to AAA, what they have to do is come up with some sort of budget deficit agreement. That's one thing that caused this in the first place. You know, the S&P guys were looking for about a $4 trillion agreement as far as savings on the deficit. And the ceiling situation only came in at $2.7 trillion. And again, that's kind of why they reiterated the possibility that they were going to have this sort of downgrade. Will this lead to a recession in itself? No. A recession is if the economy shrinks for 2 consecutive quarters. The economy is slow growth, slow global growth, but just by downgrading one level from AAA to BBB plus isn't going to drive us into a recession. There would be other elements that would have to occur for that to occur.
You hear a lot of this terminology, and for many people, it turns into foreign language in a way. So real quick, if you could, what do you tell your clients when your phone's ringing off the hook tomorrow morning?
It's a great question. The first thing you tell clients is don't panic. Okay, this is not the time to make drastic changes in your investments. Okay, if they're calling me or they're calling other professionals that they're working with, they need to reevaluate where their portfolios are, make sure that they're well diversified, and markets swinging the way that they have, they also need to make sure they're what we call rebalancing the portfolios. If things go up in the portfolio, they need to take some profits, move it over to other investments that have actually gone down and maybe got a little bit cheaper. Those would be the big takeaways.
All right, Mike Rogers, president of 360 Financial. We always appreciate your input. Thanks a lot for being here.
Thank you, Jeff.